Hey, good afternoon, everyone. This is Trader Tim from E-mini Mind. Today is the 12th of June, 2017, and we're doing a Monday market analysis. Lots to talk about today. As you can see, drawn up here, what I was talking about last week, using the most recent low on the daily chart on the ES to highs. Well, Friday we pulled back to and through the 61.8. Today we're holding and just kind of sitting up at the negative 23% target of those two daily longs below us. I've left those drawn up just so we can kind of be reminded that we are at the negative 23% retracements. The next low to high gives us a 23.9750, and we have really broken down in a lot more ways than it may first appear. So let's take a look at what I mean. So if we go over to the NASDAQ, we can see the much more major pullback on very strong volume. If I were to pull up a 20 and 50 period moving average that I do every once in a while when we get in these kind of situations, you can see we were kind of sitting along well above the 20 actually, and we'd pull back to the 20 and then rise up above the 20. And every so often, every couple months here, we've pulled all the way back to the 50. Once again to the 50, and then now pulled back to the 50. Now if you can see the volume here extremely high relative to the recent anything we've seen so far this year. So I think we have a very big shift coming in the broader market. At least, if we compare the NASDAQ, which has been leading the other markets, the S&P still holding its trend, the Dow as well, kind of holding up near highs. The Russell has been the weakest, and it did not get a major breakdown on Friday. And instead it kind of closed right about the open, but it was the NASDAQ that really sold off. Some of the individuals in the tech space, Google, big sell-off, big volume. Same with Apple, Netflix, and Amazon, sort of those the big four. So a very big shift in the trend, at least a breakdown that we haven't seen that's a little bit bigger than just a little bit of a pullback here. So my cautionary radar has gone up in terms of, are we going to see a bigger breakdown? We've broken the 61.8. We can draw from highs to lows. Now this candle is so big in and of itself. If we go to Friday on the 5-minute, I'll go to a 15-minute, be a little bit clearer. We can see, rally to new highs, and as soon as we broke into new highs, lots of selling pressure, profit taking coming in, and then a little bit of a rally into the close. And so, going forward in the week ahead, a lot of times in markets that are coming off of highs or pulling back, there can be some really, really fast, good trends to capture. Just this morning, for instance, if we look at the ES from this morning's highs down to lows, we had a nice retracement at 24.24s, sold off right to the negative 23% target. A nice, pretty decent move. The target down at 19s, so 24 to 19, 6 points, 5 points rather, and then it did end up drifting a little bit lower. Sometimes I get questions, why do you wait the first 15 minutes out before jumping in? Pretty much other than the first 5-minute breakout setup, all trading for me begins 15 minutes after the bell. And you can see here this morning, this first little long setup ended up being kind of a fake out. And you can see right about 8 minutes after the bell, is when it pulled back. So if you give the market about 15 minutes to settle out, you can kind of stay out or avoid some of those fake outs. Another thing I want to talk about is the volatility index, and we saw a little bit of a spike, but nothing up until the upper 15-16 range. And so this week, if we get a bigger sell-off, I would want to see the VIX to spike quite a bit more. Even in the S&P and the Dow, we had bigger volume, sort of a just a churning day, spinning top where the market closes right near the open. And so a lot of contracts and shares changing hands, but really in the S&P and the Dow, not a huge swing from one direction or another. So this week we'll be looking for some sort of potential change in trend. It's certainly possible that we can come up and break highs again, even though we traded through the 61.8. The 24.50 would be sort of that next magnet if we were to come up and break highs. Now we have this huge candle from Friday, a 30-point range. And then we also have things like Bitcoin, which is trading just shy of 3,000. So we could get a break, and that could really accelerate some of the cryptocurrencies. I'll be doing a live trading session tomorrow morning, Tuesday. You can check that out at emoneymind.com/VIP to join in. And yeah, just keep your cautionary radar up. Look for things that might seem a little bit different in the past couple of weeks, even couple of months that we've been moving higher. And if we come down and break the swing low at 2400s, it'll be really important to see if we break 2400 and form a hammer and put in a nice support level and see if buyers can step in at that big round 2400 level, and in which case, just a smaller pullback, set up a new support level and rally, or do we break down and then start to accelerate as we break down? We're in the new contract month. The futures rollover expiration has passed, and so we don't have any more of the funkiness that can sometimes happen between futures rollover Thursday and then expiration that following week on Friday. So we should have some great trading opportunities coming up. Hope you have a great week. We'll talk to you soon.